The Fed's gloomy forecasts deter investors. Oil back in the red. On Tuesday, U.S. stock markets were mostly lower amid profit-taking from investors. The Dow slid 1.09%, the S&P 500 dipped 0.78%, while the Nasdaq Composite rose 0.29%, and briefly crossed the 10,000 mark on the rally in Amazon and Apple shares, which both hit record highs, gaining at least 3% each. Facebook and Netflix also gained over 3% each. On Wednesday, Asian equities were mixed as Chinese inflation data for May missed expectations. Consumer Price Index rose 2.4% year-on-year in May, less than a 2.7% increase estimated by economists, while Producer Price Index for May fell 3.7% from a year earlier, a larger decline than the expected 3.3%. Also, investors awaited the announcement of the U.S. Federal Reserve's monetary policy decision and the economic forecast. As a result, Japan's Nikkei 225 closed 0.15% higher, Hong Kong's Hang Seng Index was fractionally lower, China's Shanghai Composite was down 4.42%, while the S&P ASX 200 in Australia closed slightly higher at 6,148.40. Overall, the MSCI Asia ex-Japan Index gained 0.34%. And in Europe, stocks started the session on the upbeat note but closed slightly lower on Wednesday as investors await the outcome of the U.S. Federal Reserve's latest policy meeting and economic forecasts. The Pan-European Stock 600 finished 0.2% lower, with the majority of sectors in the red. On the negative side, the Organization for Economic Cooperation and Development warned that the coronavirus pandemic is on track to cause the worst peacetime recession in 100 years, and cautioned that a second wave of infections could cause the global economy to contract by 7.6% this year. U.S. equities turned positive on Wednesday after the Federal Reserve repeated its promise of support for the economy in its response to the coronavirus pandemic. Gains were led by the technology sector, and the Nasdaq was up more than 1%, while the Dow Jones Industrial Average rose 0.23% and the S&P 500 gained 0.46%. In their first economic projections this year, Fed officials indicated that they expected the unemployment rate to end 2020 at 9.3% and remain elevated for years. Output is expected to be 6.5% lower at the end of this year than it was in the final quarter of 2019. Of note, the new forecasts predict a much slower path back to economic strength than that of the Trump administration. The central bank also said that it would continue buying government-backed debt, at least in the current pace, to sustain smooth market functioning. Meanwhile, core U.S. consumer prices fell for yet again in May, the longest stretch of declines on record. Today in Asia, shares dropped after a downbeat economic outlook from the Federal Reserve undermined percent market optimism and fueled expectations recovery would require even more stimulus measures. MSCI's broadest index of Asia-Pacific shares outside Japan slipped 1.1%, putting an end to a 10-session winning streak. As for currencies, the dollar stayed under pressure after Jerome Powell said that he was not even thinking about raising rates. However, the U.S. currency shows some recovery signs early on Thursday. As such, the euro-US dollar that briefly exceeded the 1.14 handle yesterday has retreated to the 1.1350 ahead of the European session, as risk sentiment deteriorated after the Federal Reserve meeting. If the selling pressure intensifies, the pair may get below 1.1325 and threaten the 1.13 support zone. In commodities, oil prices failed to challenge the $42 figure overnight and turned negative on Thursday again. Still, Brent crude continues to hold above the $40 key handle, a sign of limited downward pressure. The prices are struggling amid worries about slow demand growth with the coronavirus cases rising and U.S. crude stockpiles hitting an all-time high. U.S. crude inventories rose unexpectedly by 5.7 million barrels in the week to June 5th to 538.1 million barrels. That is all for today. Thank you for watching. Please click subscribe to always be in touch with the latest market news.